All right, good morning, everybody. Today is July 14th, 2021, and I'm back with another quick edition of the Wednesday live show. And the reason I say quick is because we only have one open trade right now and just a handful of pending trades. And of course, one of the reasons for that is that the market is relentlessly just pushing up against the all-time highs. And quite frankly, the way that the system is designed is that we wait for sort of a swing trade setup, which means a persistent pullback in the market and or individual stocks that sets us up for a swing trade. And the conditions aren't really all that great for it now. Now, of course, there is quite a few individual stocks that aren't performing as well as the market. As a matter of fact, I've seen a lot of people noting lately that the indexes are being held up by the mega cap tech stocks, which is kind of par for the course. I mean, that's been going on for a long time, right? Even before the pandemic sell-off, Apple, Amazon, Microsoft, Google, Facebook, these stocks have been the market leaders, and of course the indexes, or I should say the major indexes, are extremely weighted heavily in these mega cap stocks, which they're just on tears. But there's a lot of smaller stocks, and particularly the Russell 2000 not performing all that great. But anyway, the idea of the idea of swing trading cycles is that, and back in the old days, back in the old days before all this Fed intervention, we'd get some decent swing trade cycles. But I'm sure, eventually we'll, like there's been, okay, so I have the SPY. The reason I have the SPY up here is because of this trend line that fits so well. You can draw a similar trend line on the S&P 500, but it doesn't fit quite as perfectly with the touches of the trend line. I have a 50-day moving average, which is the red moving average, and I have the 200-day moving average, which has a really nice slope up. So, as I've been saying for it seems like months now, as long as the market is above this trend line, and eventually, just sort of based on the angle of that trend line, eventually, the market's going to have something that'll spook it enough to actually have more than a 2-day sell-off, right? So I mean, this is going back. Geez, here's the beginning of the year, right? We're 7 months into 2021 here, but I took this trend line all the way back to the pandemic sell-off and then some. Actually, what I did was I connected these two low points on the chart here from last fall and this spring, connected those 2 points and then just basically extended it in both directions, which happens to sort of coincide with literally, it just basically excludes the final shakeout of the pandemic low back last March. So anyway, there you go. And so, as long as that trend line, as long as that trend line is the price is above that trend line, then it's hard to get too worked up about the market collapsing or whatever, selling off big time. So and then it gets extended from the trend line and comes back down and gets close. Over here, we had a period of like, geez, I mean that was several weeks where the ranges were kind of narrow. It was relatively boring. We got a little bit of a sell-off that poked below the 50-day moving average. That's another kind of interesting thing. So, a lot of times I don't have moving averages on these charts, but I mean, look at this. Last November, market, which spent a little bit of time in late October, a little bit of time, I mean like, 5 or 6 days below the 50-day moving average. And since then, every little poke below the 50-day has been like, either a 1 day or, almost an intraday or a 1 day sort of event. And so I think that that's something to keep an eye on. And so the market just, it keeps sort of going up at this angle here. And if you extended this, if I extended this way out in the future, it'll be sort of it'll be the thing to watch when and if the market ever decides to have another correction. So, a dip, a little dip, I call a dip like 3 to 5%, right, would be a dip. So, I mean, at this point, a dip would probably take you somewhere to the vicinity of, the trend line or the 50-day moving average. What's interesting about the 50-day that I was just getting ready to point out was that these little forays below the 50-day moving average are literally like intraday to 1 day events recently. And so 50 days is a ways down. The trend line's a ways down. We're getting a little extended from the trend line. Um, these are every single break, even over here. Well, there was the last sell-off. It was a little bit of a dip. It was probably close to 3%, but ever since then, the market's like kind of making a nominal new high, either an intraday or a new closing high, like literally practically every other day, right? Like out of the last few weeks here, you have a lot of nominal or nominal intraday new highs, new closing highs, new closing highs. And I guess about a week ago, the market got spooked for 1 day. There was a big gap down and rallied right back up. So that's another sort of interesting phenomena that's happening right now is that there are certain days like yesterday, you get a nominal intraday high a lot of times in the morning. Like we had this overnight gap, and then the market likes to drift sideways or sell down during the day. I'm sure you guys have seen that chart that basically says it basically attributes the majority of the gains in the market for for years. I mean, there's a couple different ones to overnight rallies, which is pretty amazing, but it is what it is. Anyway, this bull market is just gonna keep on marching and marching and marching until, I mean, if you just if you look at it objectively using technical analysis, which is honestly the way to look at things objectively, because nothing else seems to really make sense. But objectively speaking, until this trend line gets violated, which hasn't happened in a very, very long time, but until this trend line gets violated, then this market's not going to fall apart. And so that will be, that'd be like the first warning sign. That doesn't mean that the market can't, sell off, break below the trend line, and then recover. But there's this sort of in the back of everyone's mind. Let's move over to the Qs here because the Qs are even more extraordinary. The clip at which the Qs are rising right here is just astounding. And if I put, it's the NASDAQ 100, but this little sort of current run, which is at an extreme angle, reminds me a little bit of the last time we had sort of an extreme angle, which was back here, I guess, last August. You had sort of an extreme angle, and then I don't even remember what it was, but something caused an actual sell-off. So there's been a couple of sell-offs here, right? So anyway, this is the kind of thing that we would look for here. Is this is the kind of thing that the system likes. Is a sell-off that happens over a period of time that sets up a bunch of stocks for rebound. The trend is up. I'll draw another trend line on here. I'm getting a little braver about drawing trend lines on my charts live here, but this is the one that gets me. Like, whoops, yeah, spoke too soon. All right, so there's that trend line. Yeah, that's basically like the sort of the right now anyway, it's like the primary trend line. But this new sort of trend line here, which is, I mean, can you even draw a trend line that steep? I suppose you can, but that's incredible, right? And thanks to Jay Powell and the Fed, um, I think there's a bunch of news about what Powell said this morning and this and that, and so they're planning on just keeping the pedal to the metal and no change in. It's a little bit tricky here. There we go. I'll try to extend it a little bit. No change in Fed policy until they're 100% confident that that their goals are met. Now, of course, the big news of the week is that inflation is running really hot, and they're claiming it's transitory and this and that. And so, boy, it's they've kind of got themselves in a little bit of a pickle. But real quick before we move on, I wanted to point out that the RSI on the Nasdaq 100 is at 78, which you can see over here, which is it's pushing the envelope a little bit. So back in the old days, overbought meant that the RSI, the RSI would show you that the market's overbought when it poked above 70. And then, geez, going back a ways, I think I remember times where the RSI on the indexes got up to like, 80 or 90, which is pretty crazy. I guess if I went back far enough on here, it was pre-pandemic. Like back over here, I don't know if I can, well, I'm not going to worry about it. But anyway, the RSI was like, pushing 90 back over here. And that was back around that same time that, the market was rising at that crazy angle I was talking about. RSI got extremely overbought. But anyway, theoretically speaking, the market is extremely overbought. I've seen all kinds of charts and stuff lately about valuations, and so, but then again, same principle as what I was talking about with the S&P. Market can stay. There's the old saying: the market can stay overbought longer than you can stay solvent, or something like that. So the market can stay irrational longer than you can stay solvent. So anyway, you never try and pick a top for one thing, and it seems like the market is as crazy as it is. That's sort of using these trend lines and looking at it sort of objectively with technical analysis, keeps you out of trouble, because that doesn't mean now's a great time to buy or whatever. So, but then again, these dips, both of these recent dips here, there hasn't really been a dip in the Nasdaq since, well, for quite some time. But as I recall, like, back around this area in mid-May, we had a bunch of stocks set up. I know you guys remember that, because it seems like, we went from probably back over here at the peak, we went from hardly anything on the pending and hardly any open trades. I think for a while we had one open trade, just like right now. And then, lo and behold, something comes along and there's a little bit of a sell-off, and that sets you up for another swing cycle. So, you want to be cognizant of, I mean, the market's still gonna theoretically move in cycles. They may be shorter or longer period cycles, but eventually a sell-off comes along for whatever reason, and Nowadays, it seems like people get freaked out, on like 1% down, or a couple of percent or one intraday sell off, they start getting nervous. But, um, over the years, and this is sort of a new market environment for everybody that's been around for a long time, because the one thing that everybody, and the funny thing is everybody's like aware of it now, right? Is that the Fed expanding their balance sheet, and this sort of unprecedented Fed intervention in the markets. I mean, they're still pumping 120 billion dollars a month into the into asset purchases, I should say, and it's going to find their way into assets, right? And so, Fed's pumping all this money in, and they're talking about tapering, and people are talking about when they're going to start talking about tapering. And so Powell's term ends at some point. I'm not sure exactly when, but I've seen some things on that about how Powell's term's going to end. And so now we're in sort of a spot where it's to his advantage to just pretend that pretend that the Fed needs to keep purchasing assets to the tune of 120 billion dollars a month, and just keep that going, and then just hand the ball off to someone else and let them worry about tapering, right? So it was interesting on CNBC this morning. Steve Mnuchin said that the Fed should immediately stop purchasing assets and taper, and then so you got that. First you got the taper, and that's going to be one of those things where they've done. I mean, this is just like the a rerun of an old movie back when the financial crisis in 2008, and they had all the QEs and that, and every time they scaled back their asset purchases, the market would take a winger. And so what they would do is, like, they'd set this really long timeline, and I think it was Yellen, was it Bernanke or Yellen? I said that the tapering would be like watching the paint dry or something like that. And so the last thing they want to do is spook the market. But they're in a pickle now because all of this craziness has resulted in inflation, like, to nobody's surprise, because that's what's happened all throughout history, right? When banks create money out of thin air and water down the money supply, then that creates inflation. And so now you get the highest inflation in 30 years or whatever it is, and interest rates are essentially at zero. And so they've painted themselves in a corner, and I think Powell is just he's biding time. He wants to keep this thing going until he can hand it off to somebody else and let them worry about it. But I don't know. I mean, it is what it is. But anyway, all that macro stuff aside, um, the old saying, is just the trend is your friend. This trend is a little bit scary here, because you got the primary trend, you got this trend, a sell off in the Nasdaq anyway, which is obviously driving the market, but a sell off in the Nasdaq from this sort of parabolic trend, even down to like the primary trend, would be like the end of the world, right? Can you imagine that? Imagine if the market started selling off and sold down to here. And I mean, it's done it before, right? The Nasdaq's actually had just since well, this was the parabolic run up last August, right? That was a parabolic run up, and then you had a sell off that basically took it all the way back to where it started, and then another rally, and then another sell off. So you got one, two sell offs there, three, four sell offs that were pretty substantial. And so, eventually, and so here's the thing I keep thinking is, like, earnings season's just now kicking off, and yeah, you never know. Valuations on the market by all sorts of crazy standards are like the highest in history, right? I saw a chart, and I saw a chart yesterday that was a valuation metric based on like the earnings yield of the S&P or something. Maybe it was what was his name? Peter, the old Fidelity Magellan guy. Anyways, he had some valuation metric that is basically like it's higher than 1929 or 1987 or 2000. I mean, it's the highest ever right now, and had something to do with the earnings yield on the S&P 500. But anyway, I've seen all sorts of charts over the past, well, year to date, showing how the valuations on the market are just, they're at the highest they've ever been. Any way that you want to slice and dice it. So anyway, I suppose if I was looking for, a catalyst, and that's the other thing, is that the inertia of this sort of market just drifting higher and going up and every dip being bought, the inertia of all that, it's just continuing to, drive the market higher. And so, what's the catalyst for a sell-off? Well, geez, the other day, a few days back, interest rates hit some sort of low. I think the 10-year note was down to like 1.37 or something, which is, according to some people, signaling that an economic slowdown is, the bond market thinks that the economy is going to slow down, right? And so, but you get the Fed intervention in the bond market that here's the thing: is the 10 years yielding 1.4%, say, roughly, and inflation's running at 5%. I mean, it doesn't make any sense, and so something isn't right. But with all this Fed intervention, you've got a lot of distortions in the overall market, which of course is something that obviously everybody knows. Anyway, let's move on here. We have one open trade in Pfizer, and we'll take a quick look at PFE, and we will see that basically, Pfizer's just kind of drifting here. Triggered in, and then just basically it triggered in the day that it triggered in at the open. Let's see if I can do this right. There we go. There we go. So this night it closed above the trigger. This day it was a buy at the open, and it basically just blew through the target on day one, right? Then it had a nice pullback to, practically down to the lows of, so this little 3-day run, this is kind of an anomaly, but at the same time, it is what it is. And so like right now, it's sold off, bounced around, trailing stop came up a little bit, and so now the current price is sitting, the past few days here, right around the trigger, and that's it. So we actually had quite a few stocks that I guess we could look at some of these, some of the closed trades here from the past batch, I should say. Let's see. Well, let's see. We go back to yeah. I mean, this was basically like the last batch here, and you can see that there was there was a handful of ones that got stopped out, handful of stocks that got stopped out for nothing over 5%. So there's 4 of them. I mean, 2-3%, 3% is not a big deal. 4%, anything less than 5% is not what I would consider to be. There's a lot of stocks out there that fluctuate 5% in a day, and so from a swing trading perspective, not a big deal. And so in that last batch here, we had a few really nice winners, so that more than make up for that. We had this Silicon Labs was up 17%. You can see Twitter was up a bit. So anyway, that's kind of the that's kind of the idea. I wanted to look at a couple of those since there's not much to talk about other than Pfizer seems to be doing okay here, the open trade. But let's go back through a few of these because just sort of so here's what's funny about Twitter is that crazy open, and this is the one where for some reason it didn't want to save all the stuff I drew on it, but I'm trying to remember where the target even was on this. Let's see, the target on Twitter was 60, so that would be right here, $60. Like so, it hit. Twitter triggered in, hit the target, and then took another big leg up. But that one day, see, that's the thing about the trailing stop is that was such a big move that the trailing stop tightened up, tightened up, tightened up, and then the idea is that when a stock gets really extended after a big run, you want to have your trailing stop, pretty tight. So it's like a 1 day knockout sort of, and look at it now, continuing to go. That's kind of interesting. So Shake Shack, big move here. There's the trigger, and so it did what it was supposed to do, and then this literally the same day. Um, last I guess yeah, it was last week we had that big sort of gap down open or whatever, and so that knocked out a handful of these open trades, but this one worked out pretty good too. At the peak here, it was up like 23%, and then when it tagged this stop, which basically the stop was right up at the target, so it ended up 11%, so no big deal. But maybe what we'll do real quick here is take a look at the current pending trades, which there's only a handful. There's only 4 pending trades, and so these are the ones that have the potential to trigger in here. So, and quite frankly, there's a few of them. There's a few others that Jeffrey and I talked about last night. Like there's a few other stocks that look like potential. They could be setting up for potential trades, in which case they'll hit the pending list. So, interestingly enough, the 200-day moving average, that blue line, looks like a trend line on this NEO. So, stock had a really nice rally here, and then now it's in a down cycle, and so basically, you guys know how this works. Let me see if I can draw this on the chart. Yeah, I mean, I'll draw it on the chart here, and so theoretically, there's a spot where, whoop, yeah, these trend lines are a little bit weird. There we go. So somewhere, there we go, around, yeah, so it's going to be just above this price action here. There we go, close enough, all right? So anyway, the trigger on NEO is if this is just like a little dip and it, theoretically finds some support around this 50-day and 200-day, which are both sloping up, so bounce around a little bit here and turn back up. At this point, right above this layer of resistance here, a close above that would trigger us in. If, several days go by and you maybe get some narrow range days down here, well, this trigger may adjust down, right? And that's the idea. And then, if we get a long sort of extended sell-off, like, if we get and ideally, I mean, this is kind of more ideal, is that you get an actual sell-off that kind of, I mean, this is a real steep, quick sell-off here, so ideally you get these sell-offs that but the thing of it is they don't always work out like that, right? I'm just saying that's more of sort of an ideal type of sell-off where it runs its course, and then you sort of bottom out and then turn back up. So, but there's always the idea that if this thing just tanks down here, it may or may not drop off the list. So I'm thinking in the back of my mind that part of the reason that it's pending, right, and we haven't seen this in a while, is that it's still above the 50 and the 200 day, which are sloping up. So if it were to like really lose those, it may actually come off the list. So we'll just have to see. But anyway, it's setting up right now, and theoretically, like I've said this, a bunch of times in the past, that it could bounce around down here and this and that, and a week out, 2 weeks out, um, then it starts to turn back up, in which case it would probably be more appealing. But sometimes you get, sell off like this, and then it'll just turn right back around and rip higher. So kind of interesting. We'll see. Let's see. Pending CYRX. This is one that we've seen before. This is one we've seen before in the I don't have any marks on here, but seems like we've seen this one before, maybe a while back when I was using the other charts. Yeah, I mean this thing, man, can take off and just rip higher. You can see that back at the beginning of the year, but yeah, still looking okay. There's a decent little sell-off sort of underway here as far as this this little recent period here. It's a couple of weeks, and you've seen some sell-offs and rallies in here, so there's a little bit of potential here. Look at this last sell-off, this last big sell-off happened really quick, 5 or 6 days, and then you had like this perfect little pivot low, which, incidentally was below well below the 200 and the 50, but perfect little pivot low, and then it turned back around and right back up to where it started. And so you can see, several sell-offs here that resulted in subsequent rallies. So it's got a pretty good look to it. If this thing were to go on for another week or so. So, right now the trigger on this is going to be obviously a break above that trend line. So it's actually like quite a distance up. So it's got a little work to do, but keep your eye on that trigger price because it's going to move. So real quick, two more. Kroger, which Kroger's got a pretty nice little pattern. This is not a very volatile stock, but it's a nice little pattern there. This little sell-off that's underway here is, I guess I could draw a trend line sort of. Whoop. These charts, man, they're designed to frustrate me compared to the ones I used to use, but at the same time, I'm sort of getting the hang of it a little bit. So it's just a little quirky, a little more difficult to work with. Let's see if I can do this. Oh, see, just a little quirky, but I'm getting used to them. So just for the fun of it, I'll draw a trend line across those highs, across the highest highs, and so you can see that, oh, there we go. You can see that there's a nice little sort of pull back to the, back over here, pull back a little bit to the 50-day. This has a really nice sort of uptrend going here. I don't know why I do this to myself, but whoop. All right, see, that's here we go. That's what I was looking for. I wanted to sort of draw an uptrend line. There we go. That's actually a pretty nice little sort of triangle that this stock is working on here. So there we go. This must be I don't know what that is, but it kind of skews everything. So anyway, this is setting up pretty good too. Right? You got this primary uptrend going here. It's sort of in pullback mode, and so out in the future, excuse me, right now, well, you can look at the pending trades and see that right now the entry is above, above yesterday's high, but ideally this thing will bounce around, maybe even test the bottom of it out in the future here. If a period of time goes by, a few more trading days into next week, then and you get some price action in the lower part of this pattern, then the trigger price will come down a little bit and perhaps be out here, in the low 38s instead of the high 38s, and you get a close and trigger in basically just in time for the next sort of up cycle where it rallies back up. The only thing to keep in mind right now is that, like I said earlier, we're headed right into earnings season here, so I haven't looked to see when the earnings are out on Kroger, but if the stock happens to trigger in a couple of days ahead of earnings, we won't let it trigger in, basically. So, because we don't want, the system is the philosophy behind the system is that we don't hold a stock over earnings, and so we don't want one to trigger in. Generally speaking, there's got to be more than a week's worth of trading left before we will let one trigger in ahead of earnings. So if even if it were to trigger in and earnings are coming out in 3 days, and I'll have to, as this pending list grows, I'll see if I can find a way to look up all the earnings just to make sure. It would be nice not to have them on the pending list if they were getting ready to come out with earnings, but the system doesn't have any way to do that. The thing about earnings is weird is that the dates fluctuate, right? Like you'll see on my Thinkorswim anyway, there's like a little notification and you can look to see when the earnings are coming out, and it generally starts like a month ahead of time, 3 or 4 weeks ahead of time, and then that earnings date can change. So I see it all the time. I see, there'll be one earnings date, and then a week later, week and a half later, the date has actually changed. So it's kind of a fluid thing that we have to kind of manage manually. Last one here is a gold stock, Newmont Mining. That's the last one on the pending list. This is actually kind of a decent setup because, as you can see, there's this big sort of resistance area here. See if I can change the color of that on the fly. Yeah, there we go. So, here's the big sort of resistance area. Nice sell-off, sell-off, and it's kind of holding the 200-day moving average. And so basically we're looking for it to turn back up here at some point. Well, actually, we're not looking for it to turn back up. The idea is that the system itself is saying, hey, stock had this big rally, gave back about half of it, and it's just sitting right here, sort of going sideways, and there's a lot of potential for it to rally back up. So, rally back up to the area of this 50-day. It's like in between the 50 and 200, and boy, this thing is just going sideways here, so that's kind of interesting. And so that's it. That's the pending list, the one open trade in Pfizer, and market up at an all-time high, but selling off a little bit intraday, as is it likes to do. And so we'll just have to see what happens here. Oh, interestingly enough, on this Newmont, boy, you don't see a lot of this lately, but look at just for the fun of it, the RSI here. Look at how the RSI got up into the overbought territory up here at the peak, and then it sold off, and RSI was under 30 over here, and so now it's just kind of leveled off. So there's a lot of potential here. And here's the other thing about something like this is theoretically, this kind of looks like a big head and shoulders. If this thing breaks down, my guess is that it would drop off the list, right? Like it's either going to try and turn back up and cup up, or if it were to break down and get below, say, probably, roughly around 60, maybe even above that a little bit. But if it breaks down, doesn't trigger in, then it'll just disappear from the pending list. No big deal. So we're the system is not saying, hey, this is a pick and we think it's going to go up and this and that and buy it here. It's just saying that it has the potential after this consolidation to turn back up and rally back towards the highs. Because I mean the primary trend is still kind of up, but it's an interesting consolidation, quite honestly. It's been going sideways for a month, so we'll see what happens there. So anyway, I think out of all of them, I hate to say this, but out of all of them, I think the Neo might have the most potential, but it's still got a ways to go, right? It needs to consolidate a little bit, but this is a pretty volatile stock, and so you can get, like over here, you had this little sell off to the 200 day, and then really quick rally that was significant, from just below 35 to almost 45 in a few sessions. So I kind of like the way this one's setting up, but this one needs more time too. So, and then like I said, I expect some more to hit the pending list anytime now. There's a few that look like they have some potential, so stay tuned. Anyway, thanks for tuning in. I'll see you guys here next week, same time,